If you've got cars on Turo making money, there's a question you can't afford to ignore. How is your business actually structured? Because right now, if you're operating under your own name with no business entity, your personal stuff, your house, your savings, your other assets might be more exposed than you think. Today, I'm going to walk you through the right way to think about setting up your Turo business, the LLC, and when it's time to level up. Let me start with what an LLC actually does. In plain English, LLC stands for Limited Liability Company. The key words there are limited liability. When you run your Turo business as just you, no entity, there's no legal wall between your business and your personal life. If something goes wrong and your business gets into a legal or financial mess, your personal assets can be on the line. An LLC creates that wall. It separates your business from you, so that in most cases, what happens to the business stays with the business. For a Turo host, that protection matters more than people realize. You've got vehicles out on the road, in other people's hands, every single day. You already carry protection through Turo and your insurance, and that's your first line of defense. But an LLC adds another layer, a legal separation. A legal separation between your car-sharing operation and everything else you own. For a lot of hosts, that peace of mind alone is worth it. Now, here's the second reason hosts set up an LLC, and it's a big one. It forces you to run like a real business. When you form an LLC, you open a separate business bank account. Your Turo income goes in there. Your Turo expenses come out of there. And just like that, your business finances stop being tangled up with your personal spending. That clean separation makes your bookkeeping dramatically easier. It makes tax time cleaner, and it makes every deduction easier to prove. Remember, a deduction you can't document is a deduction you don't get. An LLC with its own account is how you stay clean all year. But let me be straight with you, because I'm not here to hype you up. An LLC is not magic, and it's not always the first move for everyone. Forming one costs money up front, and there are small, ongoing requirements. And the rules, how it affects your taxes, what it costs, vary depending on where you live. This is the moment to talk to a qualified professional. Talk to an attorney or a tax advisor who can look at your numbers and tell you what makes sense for you. Don't just copy what some host did on the internet. Now, let's talk about leveling up, because this is where it gets interesting as you grow. Once your Turo business is making real, consistent profit, there's an option a lot of growing hosts look into: having their LLC taxed as something called an S-corporation. It can reduce self-employment taxes. The key phrase there is high enough to justify it. It adds paperwork and cost, so it only makes sense past a certain income level. Again, that's a conversation for your tax professional, not a decision to make off a YouTube video. So, here's the bottom line. As your Turo business grows from a side hustle into real income, the structure underneath it needs to grow too. An LLC protects your assets. It forces the clean financial separation that makes everything, your taxes, your deductions, your peace of mind, work better. And an S-corp might save more. The smart move isn't to rush out and file paperwork today. It's to know your numbers cold and bring those numbers to a professional. And knowing your numbers is exactly what FK Command Center is built for. Income, expenses, profit per car, all in one place. Walk in with the full picture. If this helped, hit subscribe. The whole series is about building real wealth with Turo. The link to FK Command Center is in the description.